Welcome to Nebraskanomics, where we help Nebraskans remove barriers to opportunity with policy research and legislative advice. I'm your host, Jim Vogel, CEO of the Platt Institute, a Nebraska-based think tank promoting policies that make it easier to get a good job, start a business, and help Nebraskans keep more of what they earn. If you want more economic freedom in Nebraska, then let's get started. As the country looks to enter a truly post-pandemic economy, there are numerous economic headlines competing for our attention, from the ability of small businesses to hire, to sharply rising agricultural commodity prices, and many more. My guest today will help us focus on what's really going to matter long-term. Joining me now is Dr. Jeremy Horpedahl, Assistant Professor of Economics at the University of Central Arkansas. Thanks for being here, Jeremy.
Thanks for the invitation. Happy to talk to you today, Jim.
Yeah, before we get too far in our discussion, you're joining me from Arkansas today, but you're pretty familiar with the economic issues in this part of the country. I first read about a paper you wrote on Nebraska taxes about 7 years ago. Can you tell us a little bit about your background, looking into Nebraska and Midwest economics issues specifically?
Yeah, absolutely. Well, I've never lived in Nebraska yet. I've lived kind of all around you. I'm originally from North and South Dakota. My first tenure track teaching job was at Buena Vista University in Storm Lake, Iowa. I was there for 5 years. So I've lived in I think about 75% of my life in the Midwest. But I'm happy to be in Arkansas now. But I still try to pay attention to what's going on in your neck of the woods, and always interested to hear how you guys are doing.
Give us a little bit more specific on some of the economic climate issues that affect our region.
Yeah, absolutely. So, when I was living in Iowa, I wrote a paper actually focusing on Nebraska's tax system. That was for the Mercatus Center. That's the paper you referenced. And in that paper, because Nebraska at the time was talking about some major tax reforms, I used that as an example to talk about some good tax reforms that a lot of states could look into. So mostly that paper tried to look at, in Nebraska, what are the areas of the tax code where there's some special privileges or loopholes or deductions that are detracting from what we might call good tax policy, which tries to keep tax rates as low as possible, but do that by making sure we're not giving out special favors to anyone, which of course Nebraska and many states do this. And as those special favors accumulate, what we've seen in most states is that tax rates have had to rise to make up for the different exemptions in the tax base. So in that paper, I just did kind of a rough calculation of, what if you were to get rid of various exemptions? How much could you either, use that money either to give Nebraskans a check every year as an offset for the exemptions you've eliminated, or what could you use it for to lower other tax rates, so that you could, if you wanted to do it in a kind of revenue neutral sort of way.
Yeah, we're going to talk a little bit more about that as the podcast continues. So thanks for that introduction. And now let's get to the hot issue of the times. And you recently wrote a blog post about inflation. And in recent days, we've seen worries about a recovery in the job market. Housing, lumber prices are way up. Corn prices have come out of the basement and surged to over $7, which hasn't been seen for a number of years now. And there are worries about gasoline too. So tell us about that inflation landscape.
Yeah. In the past few months, especially the reports that have just come out this month, we've seen a lot of inflation across broad sectors of the economy. Commodities, especially, you mentioned lumber and corn. Lumber is about tripled in the past 12 months. Corn's about doubled. And overall, commodities are up, I believe, 17% year over year in the most recent report. That's a pretty huge increase in commodity prices. And so there are a couple ways to look at that. One is, of course, for the farmers or other producers that are selling those commodities, that's great for them, right? High prices are great for the producers, but the worry is, that these high prices will spill over and increase consumer prices. On the consumer price side, other than a few kind of weird, maybe you might say pandemic anomalies, we haven't seen any kind of broad, really increase in prices. The latest consumer price index report did show average inflation pretty high year over year, but a lot of that came from the price of renting a car has almost doubled in the past year, or the price of buying a used car is way up. Gasoline prices, of course, are way up and increasing now as well. So we do see a few sectors that are increasing, but both with those producer prices way up and with the money supply up over 30% during the pandemic, there is a worry that will spill over into consumer prices. As I've looked into it, I've been trying to follow this as closely as I can, as we try to follow all the data coming out. And, we just really haven't seen it yet. I know a lot of people are worried about it, but as far as most consumer prices, we're still seeing, less than 3% inflation per year. If you take out those kind of anomalistic ones that are very weird, like the rental car prices. But I think it is a possibility that we should keep watching. But as of yet, it's mostly been on the producer side, and the consumer prices have been mostly muted so far.
That's really helpful. And one of the things that's been interesting to watch during this pandemic is just how difficult it is to predict what's going to happen next. A lot of us got it wrong as an example on how states would fare financially. As an example, Nebraska ended up running a surplus. With the vaccine rollout coming and the CDC giving new guidance on mask wearing for fully vaccinated people, we're really entering that first truly post-pandemic chapter in the United States. Do you have any thoughts on how this plays out, economically speaking?
Yeah, I think you're right that it is hard to predict. So we should be cautious right now about making predictions about anything. But I think it is good to think about what it might look like, as both households and governments are trying to plan. You have to plan based on some predictions. So I think we are at a really good place right now where, unemployment is falling, the economy is growing, state government, for the most part, their budgets are in surplus. In some sense, we've got all this federal stimulus. My worry is maybe there's just too much of it. I think One thing that we're seeing in a lot of states, and I don't believe Nebraska has done this yet, but maybe they will announce soon. A lot of states are ending these extended unemployment benefits. Arkansas did it recently. A number of Midwest states have done it. North Dakota, Iowa, Montana. I think there's a big debate among economists whether that's the kind of key to getting the labor market going again. We've seen unemployment falling from the highs, but it's kind of stalled the past few months. And the debate among policymakers and economists is, do those extended unemployment benefits, are they keeping people from getting jobs because they're so generous, or is it other concerns that are keeping people from getting jobs? So I think the outlook that I'm looking at right now is most parts of the economy are looking good. The economy is growing. Inflation is still fairly low, but the labor market's the big concern. The federal extended unemployment benefits last through September. If that really is the thing holding back the labor market from really getting back to normal, waiting until September is a long wait for the labor market to recover. So that's one thing that I'm trying to keep an eye on, whether, the states that end these extended benefits sooner, are they going to see their labor markets recover better? I think that's one thing to look at. And, my prediction is that actually will help. I will make a prediction, make a guess that, for some workers, that actually is the margin that they're worried about, that, if they go back to work, not only are they potentially exposed to some health risks, so that's diminishing every day, but, they're going to have to give up these extended unemployment benefits, and that, maybe their schools aren't open yet, that's holding some people from going back to work. So that's something I worry about. But I'm pretty optimistic that the worst of this is behind us, and it's just really the question is how fast will we recover, and are there policies? The unemployment insurance is one. But are there other policies which are going to be holding us back? I think that's to me the main concern now is that policies which may have been put in for good reason with good intentions in the past might actually hold us back in the recovery.
Well, that's a good transition to my next question. As we look at recovering growth on the statewide level, what are some of the factors you think are going to decide which states have the most robust recovery and growth in the next several years post-pandemic?
I think a lot of the factors are going to be the ones that we traditionally think about as leading to economic growth generally, right? So do states have, a tax system which is not overly burdensome? Do they have a regulatory system that, say, doesn't prevent people from getting jobs? So things like occupational licensing and other labor market restrictions like that. If a state has a lot of those, that might prevent some people from getting back to work, especially as people are trying to, after the pandemic, reassess what line of work they might want to be in. If you don't have the proper credentials, there's, 20% of the workforce now requires you to have some sort of occupational license in most states. And that could hold some people back from transitioning to other lines of work. I think those sorts of things are things states should look to as far as maybe they can do something to ease that transition to, we still have 8 million fewer employed people than we did before the pandemic in the nation as a whole. And a lot of them might want to look to getting into a new line of work. So if we think, as I do, that those labor market regulations matter all the time, they especially matter right now when you're having kind of a shakeup of the workforce. Also, state rules, this has kind of seemed like a niche thing before, but now I think it's really important. State rules about working from home and how that's taxed and how that's regulated. A lot of states now are looking to, make it easier for people to say work from home, especially if you're working in a different state from where your employer is, right? Like, let's say that you live in Nebraska but want to telecommute for an employer in Iowa. What are the rules about taxation? How easy is it to comply with that? A lot of states are looking at making that easier. I don't think we're going to see, a third of the workforce telecommuting permanently, but I think a lot more people are going to look at that as an option. Maybe some employers have seen this is actually cheaper for us to do this rather than, having all this office space. But are there rules a state has which are going to inhibit people from doing that? I think that's a big thing to look at. And states are really trying to move on that quickly to make sure that their tax code and the regulatory code is updated for a modern workforce. So I think those are the kind of things that are going to be the factors that determine it. Of course, the lingering government restrictions related to the pandemic are going to matter too. Now these are being lifted all over the place, especially now with the new CDC mask guidance. But some states still have limits on restaurant capacity. If states leave those in place longer, that may lead to some bad long-term effects. And so I think that, I've been one who has been very cautious about all the health effects, but I think we're now at the point where those effects are very limited, and states really need to look at, do those restrictions make sense anymore? And I think most of them probably don't. And so I think the more that we can get back to a more normal regulatory atmosphere, as well as looking at, lessons learned from the pandemic about regulations which were in place, which maybe don't matter in a normal economy, but now they really do as people are transitioning to a kind of different workplace. Those are the kind of things that I think that states should really look at.
Now, another reason we're so glad to have you on Nebraskanomics today is that you've written a lot about why it's important for states to look at sales tax reform to make bigger changes to the tax structures. You mentioned that earlier in the podcast. In your past work about Nebraska, what did you see what wasn't working to the state's advantage, and what could revisiting sales tax exemptions allow us to accomplish instead moving forward?
Yeah, so I think the big thing for the sales tax in Nebraska is that there's just, if we think about a sales tax as being a tax on final consumption of goods and services, there's just so much of the tax base under that definition that is not taxed in Nebraska. And Nebraska is not unusual here. Most states actually do this poorly. But there's just so much of the tax base that, because of both exemptions that the legislature has put in place, but also just the changing structure of the economy, that a lot of the sales tax base isn't being captured. Now, I'm someone who I think taxes should be as low as possible to fund, whatever government services are necessary. So we don't want to say, well, let's just pull everything to the tax base and then, taxes will go way up. I think you got to use that revenue to lower either the sales tax rate or to lower other taxes, such as income taxes, or property taxes are very high in Nebraska as well. But to look at things, so the major areas, first of all, services. So personal services are generally exempt from the sales tax base in Nebraska with some exceptions. So you go out and get a haircut, that's not taxed. You look at your neighbor to the north, South Dakota, which I'm pretty familiar with, they actually don't have an income tax. Their property taxes are a little lower than Nebraska. How do they do it? They have a very broad sales tax base. Right. You get a haircut in South Dakota, it is taxed. Groceries are taxed in South Dakota. They're one of the few states that does that. And, in some sense, that's a higher tax on one particular thing. But I think what Nebraska has done over the years, both through policy choices and through the changing structure of the economy, is that increasingly a large part of your potential sales tax base has been carved out, which means you've seen that sales tax rate go up, as well as property tax rates. That's the other thing that local governments are going to use to offset any diminishing of the sales tax base. So I think that you need to look to broadening that sales tax base, but also doing it in a smart way that doesn't lead to an overall increase in the burden of taxes. Now, this is very difficult to do politically. I think as an economist, it's very easy for me to say, we'll just do this and that will be successful. And politically, it's tough. I know that you guys have been talking about this in Nebraska for years of say, hey, here's all these exemptions. Let's get rid of them and lower rates. Sounds great. It's really hard when you get to the details. Utah is a state that back in 2019 actually tried to do this. I wrote a paper on Utah for the Center for Growth and Opportunity back during that debate. And here's how hard it is. Utah actually passed it. They passed a broadening of their sales tax base, including a lot of services and groceries. They used it to lower income tax rates. It was great. They passed it in a special session. 1 month later, there was so much political and public backlash, they repealed it. I mean, it's just, even when you pass it, it's very difficult. So I think that, the messaging on why you're doing this, it's not to, broadening the sales tax base. We don't want to use it as a way to get more revenue for the government necessarily, right? It's a way of making the tax code better. It's a way of making it fairer because you're not exempting certain things, and then taxing others. You want to tax everything fairly, but do it as low a rate as possible. So I think that that's something that I know the debate in Nebraska on this has been kind of ongoing. Since that paper I wrote 7 years ago, the debate was already kind of going then. So I think that it's a debate worth continuing to have that debate and to talk to both policymakers and ordinary Nebraskans about why we're doing this. It's not a big revenue grab. It's a way to make the tax code fit with a modern economy and to make sure the rates are as low as possible.
No, that's a great summary, and it is politically tough. But wouldn't you agree that this is the model that has worked in other states, and other states have accomplished this over the last decade?
Yeah, I mean, a lot of states have. So I mentioned Utah, which passed it and then failed, but Utah's actually had a number of good tax reforms over the past decade or so. I wrote a paper that was published in State Tax Notes, that journal, which used 5 states as examples of good tax reform that have happened the past decade, going from North Carolina to the District of Columbia to Utah. We looked at one state, Kansas, which I think didn't do it right. We used as an example of a way not to do it. But I think there's a lot of great examples of states that actually have done this, done various kinds of tax reforms, which have included broadening the sales tax base in many cases. Maybe not as broad as I would think ideally, but it's like that's the ideal. But here's what's politically possible. And so I think there are a number of good things that states can do, and it's not some pie in the sky thing. I think a lot of people look to Kansas, your neighbor to the south, and say, well, Kansas, tried this. And it didn't work. So you can't reform sales taxes in this way and then lower income tax rates, because Kansas just basically exempted a bunch of income and then their revenue fell through the bottom. I mean, you've got over a dozen examples of states in the past decade that have done it well.
Exactly.
And haven't had that big revenue effect. So I think we shouldn't have this kind of Kansas focus of, we can look at Kansas to say, well, here's a way that you wouldn't want to do it. Exactly. I mean, Kansas did some good things. I think even after they have, fix their budget problems, the rates are lower than they were before, but maybe they could have just went to those slightly lower rates right away rather than trying to do the big get rid of everything exempting. They exempted for pass-through businesses, small businesses, just exempted all that immediately. That's going to cause a big revenue shortfall. That's going to make, I think, what could have been a good reform challenging in the end. But there's lots of examples of states, and I always like to say, every state's unique. There's no state you can completely copy. It's absurd to say, well, this state did it, so we can just do the exact same thing. But I also do believe there are lessons we can learn from other states, even if there's no one state that's exactly like Nebraska. Iowa has been doing some great tax reform lately as well, and starting with the highest corporate tax rate in the country, they've done some good reforms to get that down. And so you can look at states like Iowa. They've done good reforms. They're similar to you guys in a lot of ways. South Dakota is also, they're a little different, but they're similar to you guys in other ways. And they've had just, I think, good long-term tax policy of keeping rates down and keeping the base broad. So I think there's a lot of good lessons to learn from other states.
This has been great information. Can you share with everyone listening how they can follow your work in the future?
Yeah, absolutely. So you mentioned a blog post I wrote. I write for a blog. It's got a pretty simple title. It's called Economist Writing Every Day. So it's a group blog, and one of us posts one blog post a day. That's our commitment to having lots of content. We got 7 bloggers and 1 post a day. So Economist Writing Every Day. Just Google that and you'll find our blog. You can follow me on Twitter, JMHORP. That's M as in Mark. And I try to post, like I'm posting stuff on inflation this week. So it's a good way to kind of, get information out there, which I might write a paper on later at some point. Maybe your Nebraska listeners may not be totally interested in Arkansas, but you can follow my work at the Arkansas Center for Research and Economics as well. If you just Google that, I do a lot of state tax work, mostly on Arkansas. But again, I think there's things you can learn from looking at other states about things that might work in your state too.
Professor Horpedahl, thanks for visiting with us on Nebraskanomics, and we hope to have you back soon. Thanks so much, Jim. Thank you for listening to today's episode. If you want more economic freedom in Nebraska, please visit plattinstitute.org to make a donation to help fund our research and advocacy. Or you can subscribe to our newsletter and learn about today's most important issues facing Nebraskans. It's time to stop the status quo. Let's remove economic barriers and make Nebraskans proud.